We are going to have a lot of fun here today talking about the Consumer Price Index report, and really it's turning out to be one of the best days that I have ever seen in the home loan interest rate world for a single day. Now, I've been doing this for 21 years, and this is probably one of the best days I've ever seen. So we have a lot of information to go through. Make sure that you stick around for the full video, because at the end of showing you what has happened and how it's affecting home loan interest rates, I'm going to go in and I'm going to show you exactly how it affects buying power for our buyers. How much did their buying power change today? How much did the interest rates change today? And how much did the monthly payment change today on a specific scenario? So this is going to be a lot of information. Stick around. If you like this information, please make sure that you let me know, like, subscribe, share, hit the button, whatever, so that I continue to know what it is that you like, what you want to hear more of. And of course, it helps my channel. This is the Brent Bruce Daily for November the 10th, 2022. It is 2:06 p.m. Central Time. And this is kind of a day that might live in infamy, because the CPI seems to have shown that we have broken the back of inflation. And that's what I was talking about yesterday. So we know that inflation has been going up, and it's going to start coming back down. So let's take a look at some of these charts here. First off, let's jump over and look at the stock market. Loving the news. The Dow Jones is up 1,088, S&P 183, NASDAQ 660. The NASDAQ is up 6.38% in a day because of the overall feeling that we may finally have broken the back of inflation. So let's take a look and see some more information here. Here's a report from CNBC talking about the Consumer Price Index, a key inflation barometer, jumped 7.7% in October versus a year ago. Okay, so what that is saying, if you really read that, is that the price of items has gone up 7.7% versus a year ago. A Snickers bar is now costing 7.7% more than it did a year ago. But here's the point. They use the word jumped, and it makes people go, oh my gosh. But we already know inflation is out there. We know inflation is high. In fact, we've had reports showing inflation at 8% or higher in previous months. Here's the point, and here's why we're excited, is that we're showing that inflation is subsiding. Not that inflation is gone. Inflation went up like this, and it will go down like this. It will not go up like this and down like this, right? So we are showing a report today that shows that the effects of the Federal Reserve changing the federal funds rate and their monetary policy may be bringing inflation down, and that is what we need. Everybody wants inflation to come back down. So what came out here today? What report came out? Let's jump over to the release of the Consumer Price Index. This is directly from the horse's mouth, the U.S. Bureau of Labor Statistics. Let's take a look and see what we've got here. So the Consumer Price Index for all urban consumers rose 0.4%. Now, if you watched the report yesterday, you're already excited because you're seeing a 0.4. Now, check this out. That's 0.4 on the wholesale number. That's not the core number. We are most focused on the core number. Now, what is the core number? The core number excludes food and energy. Okay, so look right here. The index for all items less food and energy rose 0.3. Okay, 0.3, guys. What number were we trying to beat? We were trying to beat what? We are at 0.3. Let's jump over and see what we were trying to beat. Okay, so here's this chart that I always like to bring up. We were trying to beat a 0.6. So this chart shows each month, month over month, what the reading was. Okay, so a 0.6, a 0.5, a 0.6. We needed to replace, this is the October reading of 2021. We need to replace that with a number lower than 0.6 to show inflation is subsiding. This is a chart that we love. It's provided by the MBS Highway team. Always want to give them kudos and accolades. They do a great job of giving us this information, explaining this to us. And I love to be able to pull this chart and show you because it's so well done and so clear. Look at this. We came with a 0.3. Yesterday, I was talking about, man, I hope that we get, a 0.5 or a 0.4. We were talking about what if we get a 0.6? It's probably not going to be very well received. A 0.3 is huge, okay? This is an amazing drop in inflation, what we really needed. What is that doing to our actual mortgage-backed securities. Take a look at this. This is quite amazing. All right, so let me get over here. Okay, here's the chart that we look at each day. If you watch this report from time to time and you see that 191 basis point increase to the mortgage-backed securities, you're probably like myself, like my eyes are bulging, right? Because we don't see the mortgage-backed security increase by 191 basis points. It's almost unheard of. Okay, so we are up 191 on our mortgage-backed security. Look at the 10-year treasury, down 27 basis points. Yesterday, I was talking about how I really wanted to get below that 4.0 number. I think we were at about 410, 4.10, and I wanted to see us below 4.0. And I kind of said, well, hopefully we get there. We're at 3.829, down 27 basis points. That is a huge drop in the 10-year yield, which is what we really wanted to see. Look at the chart. I mean, does anything stand out to you? Okay, this is the day that the CPI report came out. This is today. We've been battling with the 25-day moving average for months now, banging up against it. And I was talking about we needed to break above it and that we needed to close above it for a day or two to convincingly allow the 25-day moving average to become a floor of support instead of the ceiling of resistance that it had been so long on the technical charts. This morning with the CPI coming out at 0.3, we blew through it. We actually opened above the 25-day. We did close above the 25-day. Blew through it, blew through the 50-day moving average, Fibonacci level, and now look at this. We're sitting right at a ceiling, which is another Fibonacci level at 100.534. Now, this is a number. I mean, this Fibonacci level is something that it makes us take pause. It makes the investment community take pause and go, okay, well, we've got a ceiling of resistance. Do we want to blow right through it? Well, there's another thing here. The psychological number that we're about ready to break 200. I mean, are we really going to close over 200 basis points? They might start to say, 191 is enough for one day. Okay. But I'll take it. Like I say, I probably have not seen us close up 191 that I can remember in my career. I've been doing this over 20 years. So this is a huge day, very exciting for nerds like me who pay attention to this. So what does that mean to our home loan interest rates, right? This is what's important is how does it convey to home loan interest rates? How does it convey to your monthly payment? And how does it convey to your buying power for your consumer, your buyer? So let's take a look at that. Let's go over to our Brent Bruce daily here. All right. So we're going to click the scenario button. Now remember, yesterday we were at 6.999 with a little bit of a credit. If I remember, we were at a credit of like maybe $800 or something like that. So let's go ahead and run the scenario now. Up 191 basis points. Where are we? In one day, we're showing to be at 6.5%. So basically down 0.5% in interest rate in a day. Well, let me open this up because how hard is it going to be to get a little bit lower than that? Take a look at this. For only $47, okay, so for the amazing discounted price of $47, you can get a 6.375 on our Brent Bruce Daily 30-year fixed conventional conforming home loan. So basically, let's be real. The rate today is 6.375. That is what our consumer would be getting. So we went from 6.999 to 6.375 in one day. Okay, that is huge. Well, we need to find out how huge is that, right? First off, for compliance purposes, this is the scenario that I just ran. Take a picture of it. I'm always in compliance. And yes, there's no additional extra points or anything like that I'm not showing you. So how does that convey over to buying power and your monthly payment? Okay, so what I've done here is I have a $400,000 purchase price with 25% down, so that matches the Brent Bruce Daily scenario. And I have a 6.99 interest rate. Let's go 6.999. 6.999. Okay, so this is yesterday. Remember, we were talking about a 6.999. The monthly payment, the principal and interest in this scenario is $1,995. All right. So now today, same exact scenario, but let's say that we are at 6.375. We went from 1995 to 1871. Okay, 1995 to 1871. That's a $124 drop in a monthly payment for a buyer in one day because of the CPI report showing inflation is subsiding. Okay, $124 is a big number. How big is that number? Well, $124 divided by 1995, that means that the monthly payment today, just today, your monthly payment came down 6.2%. 6.2% drop in your monthly payment because the CPI report came in lower than expected. All right, that's cool, wonderful, $124. But what does that do to my buying power, right? So we have this scenario here. Now, if you could have afforded $19.95 yesterday, this is the way I'm going to look at this. If you could have afforded a payment of $19.95 yesterday, and obviously this scenario today with this interest rate is only $18.71. Well, what if we increase this from $400,000 to $425,000 and with 25% down? The payment is $19.88. Okay, so what this shows you is that you can buy a house today for $25,000 more than you could have yesterday and have the same payment. Okay, so that is how important today's CPI number is. That is how impactful today was. Now let's take another look here because I'm watching this like a hawk. Let's take another look here and see where we're at. We're still up 192. We have about an hour and 20 minutes left before the market closes for the day, and then we can really take a breath that finishes up. I mean, we could lose part of that by the end of the trading day. One other thing I want to make sure you're aware of is that tomorrow is we're recognizing Veterans Day. So the bond market is closed. So even with this amazing day that happened today, if we close it up 192 or something like that, we're going to have a whole nother day that it gets to sit at that 192. So we're not going to have another day come tomorrow. We're not going to have a big day of volatility. We're going to sit Friday. We're going to sit Saturday. We're going to sit Sunday. And then we're going to go into Monday to see how the market is feeling after a few days of digesting this lower inflation data. Now, look, we just went over a lot of information, but this is a report that really is probably the biggest report that I've put out since I started the Brent Bruce Daily. This is great news. And if you go back and you look at what I had been projecting was going to need to happen for interest rates to come back down, this is what occurred today. Our first step in getting interest rates back down happened today. Now, my projection or what I think is going to be happening here is that we will see interest rates on the Brent Bruce Daily in the fours. So 4.875 is game. In the fours by the end of the second quarter. We came down 0.5% today, guys, really 3 or 5/8%. So this is a huge day. Make sure that you let your clients know that home loan interest rates came down just wonderfully today. This was a great day for home loan interest rates. It looks like overall, you could have had your monthly payment drop 6% today. And for someone who was buying a $400,000 house yesterday, they can now buy a $425,000 house and have the same payment just because of today's benefit to the mortgage-backed securities. Ton of information. Let me know your thoughts. Let me know your questions. Make sure that you like, subscribe, share, all that kind of stuff. I will get back with you, not tomorrow. I will get back with you Monday while we celebrate this great day on the Consumer Price Index report. Have a good one.